Good morning, everyone. Welcome back to Finance with Nagendra here. It's Wednesday, August 19th. Grab your coffee. Let's walk through today's key market updates before the opening bell rings. First, we will see the world markets. Wall Street fell sharply on Tuesday, and the trigger is important. The US-Iran ceasefire has expired, and prospects for reopening the Strait of Hormuz have weakened further. S&P 500 dropped by 0.69%. Nasdaq fell much sharper, 1.33%. Tech stock both the bond. The Dow held up relatively better, down around 0.5%. Europe was mixed on Tuesday. FTSE actually gained slightly, 0.07%, while CAC dropped by 0.83% and DAX fell by 0.8%. In Asia this morning, the reaction is sharp. Japan's Nikkei is down a full 2.22%, continuing yesterday's weakness, while Straits Times is down by 0.89% and Hang Seng down by 0.5%. Crude oil continues its relentless climb. Brent is now trading at 91.86, having touched 92.04 intraday, up nearly 1% again. This is now 4 to 5 consecutive sessions of gains, and it's clearly connected to the ceasefire expiry. Markets are pricing in a longer, more serious disruption with each passing day. Gold rose by 0.45% to $4354, and the India 10-year yield climbed to 6.82%, its highest level in our recent tracking, reflecting the same inflation concerns building domestically also. So here is an interesting wrinkle, though, like Indian ADRs actually recovered overnight despite the weak US market close. Infosys ADR bounced back by 1.81%, recovering some of Monday's sharp loss, and Genpact surged by 2.82%. ICICI Bank, HDFC Bank, and Dr. Reddy's ADRs were all modestly positive too. This is a genuine decoupling worth flagging, because India-specific names found buyers even as the broader US market fell, likely reflecting Tuesday's stabilizing FII activity in the home market. So what's the world market verdict? It's still cautious to negative, but with a nuance. The headline story is ceasefire expiry, crude at $92, sharp Asian losses is clearly negative, but the ADR recovery suggests India-specific sentiment may be holding up slightly better than the broader global risk-off mode. Worth watching whether this translates into Gift Nifty's actual signal today. Yeah, now we will see key news and data. What would move the market today? First, and the most important as usual, the US-Iran ceasefire. This is formally expired, and hopes for reopening Hormuz have weakened rather than strengthened. This is the cleanest signal, yet the market should stop expecting a quick resolution. Expect sustained pressure on OMCs, aviation, paints and tires as crude continues climbing, with ONGC and Oil India remaining the structural beneficiaries. The rupee, already at 95.68 against the dollar, is likely to stay under pressure. Second, Tuesday's Indian session showed a clear sector split. IT, realty, FMCG and metal all dragged the index down, while auto and pharma showed genuine resilience. Axis Bank, Maxwell Healthcare and M&M were among the notable gainers even in the falling market. This is worth flagging as a rotation pattern to watch. Defensive, domestically driven sectors holding up better than export-oriented or rate-sensitive ones. Third, BSE Limited remains under consistent selling pressure following back-to-back brokerage downgrades. A stock worth tracking given how sharply sentiment has turned on it recently. And fourth, the primary market remains active. Lalita Jewellery Mart's IPO subscription is being closely watched alongside the recently listed Milky Mist and upcoming NSE IPO charter. ICICI Bank's dollar bond issue and Seagull India's new order wins are also in focus for stock specific action today. Let us see Indian markets, today's outlook. Tuesday was Indian market's third straight losing session. Sensex fell by 0.6%, 63%. Nifty declined by 0.55% and it closed at 24,154. If we remember, we discussed like 24,200 is a key level, and yesterday it closed firmly below that 24,200 mark. Bank Nifty fell by 235 points, and Nifty 80 index was the single biggest drag, falling 1.93% alongside realty, FMCG, and metal weakness. And as we discussed, auto and pharma provided some cushion. Weakness in Infosys, Asian Paints, and Tech Mahindra dragged the headline indices, while Axis Bank, Max Healthcare, and M&M were the standout gainers. Nifty mid-cap fell by 0.43%, while small-cap held flat. The broader market showing slightly more resilience than large caps. India VIX rose about 0.88%, still relatively contained, but ticking higher as the third straight down session built some caution. Technically, derivatives data shows the highest call open interest concentrated at 24,800 to 25,000 strikes. This will be a strong resistance gap. While notable put open interest sits at 24,000 to 23,800 strikes. This confirms a support base. This gives a fairly clear range for the week. Resistance at 24,800 to 25,000 and support at 24,000 to 24,300. So given the gift nifty signal this morning, more on the, we'll discuss more on this in our, trade setup section. Expect a cautiously positive open despite the negative global backdrop. A genuine test of whether India can decouple from the broader risk-off mode, at least for today. And what are the sectors to watch? It's IT, because Tuesday's biggest drag. We need to watch whether the overnight Infosys ADR recovery translates into a stronger sector open today. And we need to watch OMC, aviation, paints and tires, because sustained pressure as crude keeps climbing, and that too toward $92. Upstream oil and gas, ONGC Oil India, because they are continued beneficiaries. Auto and pharma, because Tuesday's resilience sectors they are. Let's see if they holds today also. And realty, FMCG, metal also, because they are the laggards of Tuesday. And what are the companies in the limelight today? Infosys, because of overnight ADR recovery. BSE Limited, because it is under consistent pressure from back-to-back brokerage downgrades. Axis Bank, Max Healthcare, M&M, because Tuesday's top gainers there. It is worth tracking for continued momentum. Asian Paints, Tech Mahindra, because they were the laggards on Tuesday alongside Infosys. Lalita Jewelry Mart, IPO subscription numbers. ICICI Bank, because it is issuing dollar bond issue news. Seagull India, because it has new order win news. Now if we see FII activity on Tuesday, FIIs and have bought for 1,651 crores. They become net buyers. DIIs have bought for 2,579 crores. They are also net buyers. So this is genuinely reassuring stabilization after Monday's dramatic tug of war. Both FIIs and DIIs turned net buyers on Tuesday. FIIs bought roughly 1,652 crores after selling 2,535 crores on Monday. A real reversal rather than a continuation of outflows. Combined with the overnight ADR recovery, this suggests Monday's heavy selling may have been an overreaction to the initial escalation, with cooler heads prevailing on Tuesday, even as the headline geopolitical situation, that is ceasefire expiry, technically worsened. This is a good teaching moment. Why? Markets don't always move in a straight line with the news. For trading also, it is very important. Sentiment and positioning matters a lot here. Let us see today's Nifty trade setup. GIFT Nifty is trading at 24,203, up by 24 points, 0.1% as of I'm looking at the data around 735, 740. Here's the important calculation. That's roughly around 49 points above Nifty's Tuesday close, signaling a modest but genuine gap up open. This is a case of partial divergence. Our world markets read like we have saw in the world market clearly negative. Ceasefire expiry, crude, sharp Asian losses, all those things. Yet, GIFT Nifty is signaling positive. This likely reflects the ADR recovery and Tuesday's stabilizing institutional flows, carrying more weight for India specific sentiment than the broader global risk off mode this morning. And if you see Nifty trend, the index closed at 24,159, 154. Its third straight losing session, but the derivatives positioning, as we see, the call OA concentrated around 24,800 to 25,000 and put OA at 24,000 to 23,800. So support and resistance we already see. Let me reread it. Immediate resistance is at 24,300 with a stronger cap at 24,800 to 25,000. That is where the heaviest call OA concentration is, and immediate support is at 24,000 to 24,300 zone, backed by significant put OA at the same range. And what are the event risk today? With crude oil's relentless climb toward $92 and no resolution is in sight on the Iran situation, today is genuinely a test of whether India can decouple even partially from the broader global risk off mode. Watch the first 30 to 60 minutes of the trade closely. If the gap up holds and IT stocks stabilize, helped by the last night Infosys ADR recovery, it would be a meaningfully positive signal. If not, expect a retreat back towards Tuesday's lows. Yeah, that's your complete pre-market brief for August 19th. The big picture remains cautious given crude's climb and ceasefire expiry, but there is a genuinely interesting divergence today between the negative global backdrop and India's more resilience signals. Trade carefully, watch how the open plays out before committing to a view, and I'll see you in the next video. Thank you so much.
वीडियोस बनाने हैं फिल्मोरा है ना।